In this video, we're going to talk about the top 10 ways to invest in real estate. Before starting, do like the video and subscribe to this channel for future updates. When you have enough passive income, working becomes unnecessary since you may utilize the money from your investments to pay your bills. Financial independence is a status that most people don't achieve until they are retired. Bonds and stock dividends are the traditional sources of passive income. Number 10. Opportunity Zone Funds. The Tax Cuts and Jobs Act of 2017 established these funds and designated about 8,700 qualified opportunity zones as areas to be targeted for economic growth. The concept is straightforward: promote investment in economically disadvantaged areas by giving investors tax advantages. Private equity funds are opportunity zone funds. Accredited investors provide the funds that a seasoned commercial real estate investor utilizes to purchase property in qualified opportunity zones. Number 9. Private notes. You might simply lend them money rather than joining forces with a friend or relative who has an interest in real estate as a silent partner. Since your name isn't listed on the deed with them, it gives you even fewer safeguards. But it also means that there are no duties or liabilities of any kind. In addition, a lot of real estate investors only need money and don't want a partner to split the earnings with. Number 8. Syndications and silent partnerships. You invest money but don't actually do any of the effort of locating deals or managing properties in real estate syndications and silent partnerships. Instead, the primary partner or sponsor conducts the job and receives an additional portion of the profits in exchange. Number 7. Flipping houses. The majority of the suggestions on this list concern developing real estate-based passive income streams. The exclusions are buying and reselling houses wholesale. Although flipping homes needs a lot of labor on your behalf, the returns on your cash are extremely substantial. And like rental returns, these returns can be precisely predicted by seasoned investors. Number 6. Wholesaling. People who are new to the field of real estate investing frequently have misconceptions about wholesaling properties. Finding a fantastic offer, getting it under contract, and then profitably selling that contract to another investor are the steps involved. You never acquire ownership of the property. All you do is bring together a motivated seller and a ready real estate investor. Say, for illustration, that you locate a property worth $150,000 and put a contract on it for $110,000. You make the property available to the investors in your network for a price of $125,000. You give the contract to a taker once you have one in mind. Number 5. Airbnb vacation rentals. Although Airbnb can use a rental home for either a long-term lease or a short-term getaway rental, but the revenue models for each are very different. Cleaning the units in between visitors, promoting arranging entrance, and maintaining contact with the guests all add significantly more labor to managing short-term rental properties. You are, in essence, in the hospitality industry. Number 4. House hacking. Nobody is preventing you from residing in your own rented home. The basic concept behind house hacking is to hire someone else to pay your mortgage. The conventional strategy involves purchasing a multifamily building, relocating into one unit, and renting out the adjacent unit or units. Your neighbor tenants live there for free and pay your mortgage for you. Number 3. Rental properties. Direct ownership of investment properties has its own distinct benefits and drawbacks. When you purchase a rental property, you can accurately forecast the cash flow or return on investment (ROI). You may predict the long-term average of your expenses, including annual repair costs, vacancy rates, property taxes, property management fees, and insurance, as well as the price you are paying and the market rent. Number 2. Real estate crowdfunding. crowdfunding is a relatively recent addition to the realm of real estate investment and provides a different method of doing so, despite the fact that many crowdfunding websites still only take funds from accredited investors. These platforms are increasingly welcoming middle-class investors. This means that investors can start with less than $1,000 and start investing like more affluent peers. Number 1. REITs. Real estate investment trusts, REITs, are the first thing that comes to most investors' minds when they consider diversifying into real estate. And for good reason. Through your regular brokerage account, IRA, 401k, or other retirement account, you can purchase REITs with ease. They are governed by the Securities and Exchange Commission, SEC, and have to give a plethora of information to assist you in making informed investment decisions because they are publicly traded. So what do you think of this video? Let us know in the comment box below. Please like this video and subscribe to this channel for our future updates, and we'll see you next time.